Welcome to The Explainer, where we break down the biggest stories. And this week in crypto, wow, the market is sending some seriously mixed signals. We've got this classic tug of war playing out, between the big money optimism and the fear you can actually see on the charts.
Okay, so let's just dive right into this contradiction. Because on one side, you have these massive banks talking about a multi-trillion-dollar boom, and on the other, you've got top market analysts warning that Bitcoin could see a major price collapse. So, what's the real story? Let's break down the evidence and see if we can make sense of it.
All right, first up, let's follow the money. Because we're not talking about small-time bets here. We're talking billions with a B, pouring into the crypto space from the biggest names in finance. And this isn't just speculation. These are major strategic investments happening right now.
Let's start with this number, $2 billion. According to reports from Coin68, that's the price MasterCard is reportedly talking about to buy the stablecoin company Zero Hash. Think about that. A $2 billion price tag really shows you just how serious a payments giant like MasterCard is about owning a piece of the future of digital money.
And it wasn't a one-off thing. We saw a whole bunch of billion-dollar moves. Sources like Block24 and Coin68 reported on a Chinese fund being set up to buy $1 billion worth of Ether, Ripple spending $1 billion to scoop up a fintech firm, and the Mega ETH ICO raising this much in just 3 days. Yeah, these guys are playing for keeps.
And the venture capital is flowing too. Coin98 Insights reported that the trading firm DRW is leading a $500 million fund for something called the Canton Network. And Block24 noted that Sequoia Capital, one of the biggest names in venture, backed a major blockchain startup with another $500 million. The so-called smart money is clearly putting its cash to work.
Now, what I find really interesting here is that it shows these payment giants and global banks, they aren't just dipping their toes in the water anymore. They're building real infrastructure. You've got MasterCard buying, Visa expanding its stablecoin support across a bunch of different chains, and a huge bank like Standard Chartered putting out reports forecasting massive growth. They're all in.
But, and this is a big but, in the middle of all this frenzy, one of crypto's biggest bulls, Michael Saylor from MicroStrategy, is actually pumping the brakes a little. He told investors his firm has no plans to buy any rivals right now. Why? He points to all the uncertainty in the market. It's a pretty good reminder that even for the biggest players, the path forward isn't totally clear.
So with all this big institutional money flowing in, you'd think prices would be going to the moon, right? Well, let's take a look at the market's pulse, because the charts are telling a very, very different story than what we're hearing from the boardrooms.
Ouch! As CoinDesk reported, some of the major altcoins took a pretty significant hit. We're talking Solana, XRP, and Dogecoin all seeing these sharp drops. And for the traders out there, they broke through key support levels on high volume, which is usually not a great sign.
And it's not just the altcoins. The analytics firm Glassnode put out a pretty serious warning. They suggested that if Bitcoin can't hold its current position, we could see a much deeper price correction. They even threw out a number, $88,000, which honestly is a figure that has a lot of people scratching their heads.
And yet, at the exact same time, other analysts see a light at the end of the tunnel. A different piece from CoinDesk highlighted some long-term indicators that might signal a rebound, and they used the headline, Hopium, that crypto term for irrational hope. It just perfectly captures how divided even the experts are right now.
So this is the crucial point. While the experts are all over the place, data from the analytics firm Sentiment shows that regular, everyday retail traders are feeling extreme fear. In fact, it's the most fear we've seen since the last big crash. This creates this huge disconnect, right? You have institutions investing with a 5 or 10-year plan, while retail traders are reacting to the scary price drops they see today.
And hey, as if all that market volatility wasn't enough, we've got this whole other layer of uncertainty coming from governments and regulators. What happens in the halls of power could totally change the game for the entire industry.
Over in the US, lawmakers are really pushing to get a major crypto regulation bill passed. According to Crypto Today, key senators are working together on a deal, even with a government shutdown going on. Their goal is to get a final bill signed into law before 2026, hopefully to provide some much-needed clarity for the industry.
Meanwhile, the whole space is facing a ton of political scrutiny. This report from the Vietnamese outlet Coin68 basically translates to Binance.US accused of political horse trading after listing Trump's USD1. It just goes to show how crypto exchanges are now getting dragged into these heated election cycles with people accusing them of trying to play politics.
And look, this isn't just a US thing. Regulators all over the world are stepping up their game. As Coin68 reported, Australia is now cracking down on stablecoin issuers, giving them a really tight 8-month deadline to get a brand new license. The regulatory net is definitely tightening everywhere.
Okay, so despite all the fear in the market and all the pressure from regulators, the pace of innovation hasn't slowed down one bit. So let's shift gears and look at the key trends that are shaping the future, because this is where the long-term value is really being created.
A huge trend to watch is the tokenization of real-world assets, or RWAs. Basically, this just means taking traditional stuff, like stocks, bonds, maybe even a piece of a building, and putting them on the blockchain as a digital token. This could unlock a whole new level of efficiency and make these assets available to way more people.
And if you want to know what the potential is, look at this number, $2 trillion. That's not a typo. Standard Chartered Bank, as reported in Crypto Today, predicts the market for these tokenized RWAs could surge to $2 trillion by 2028. That's a 57-fold increase from today. It really shows you the massive scale that traditional finance sees in this tech.
So what you should take away from this is that beyond the daily price charts, some major technological shifts are happening. Sources like Coin98 and Block24 show us airdrops are still a key way to grow. The intersection of AI and crypto is absolutely exploding. Decentralized derivatives platforms, or perpdexes, are on the rise. And you have big mainstream firms like WisdomTree already launching their own tokenized funds. You just can't deny the innovation.
Which leaves us with one final, crucial question. You have these institutional giants building the future. You have everyday traders gripped by fear. And you have regulators drawing brand new lines in the sand. This convergence of forces, it suggests the crypto industry might not just be at a crossroads. It might be facing its most defining moment yet.